The way that we determine
Yes.
the financial payback on your project specifically, instead of being generic, we take the electric rate from the electricity bill that you gave us.
Yes.
And we also include not just the rates, which are broken down right here. In these cells specifically, it's itemized, just like you see on your bill. We also include demand charges, which is how much power you ask for, the peak amount of power over the course of a month. Eversource will log that and they'll charge you for that amount times a certain dollar value. And that's why we get, in the wintertime, bigger demand spikes, and in the summertime as well from heating and cooling. And that's going to cost extra money on top of the regular energy charges that you see are on any electric bill. So you guys have a building that consumes electricity plus has demand charges, and we size the solar energy system, or the 134 solar panels, to cover all of these charges combined. So we tried to start out with an annual bill of $21,904 and see how many panels that would take. And it turns out it's well over 200. So the reason that we settled on the system size that you were looking at here was because we saw that it was just about a little bit over 50% of the electricity bills paid for annually by solar panels, and we wanted to start here and say this is going to be a good jumping off point to figure out, if you did want to get to 100%, what's that going to cost, but also if you don't want to spend that much money at this time, at least you can get half of the electricity bills covered, basically guaranteed by the Eversource electricity rates every month of the year on average. So that's how we ended up creating your cost calculator. Was based on the last 3 years of electricity rates. We averaged them, all the rate changes, by what's happened most recently and divide it by 3, and then we're going to end up with certain rate tiers. So you see, first 500 kilowatt hours costs a certain amount, the next 1,000 costs another certain amount, and then all of them after that cost a little bit less. So we use that tiered pricing structure that Eversource gives, and then we customized it based on those demand charges that you see on any given month. So after all was said and done, we plugged it into a model. We came up with a certain amount of energy production from the solar panels, and then we estimated, based on those electricity rates of return, which we would find in these bottom corners, and again, we averaged that based on those 3 years, we would find a certain export rate. We call it a blended export rate. And what that means is that on average, whether you use this kilowatt hour or energy unit in the building or not, you might export some to Eversource, you might use it on site. It depends on what hour of the day it is and how much is being used. We end up with an average rate of return of 11.8 cents per kilowatt hour. And this is a dollar value. So that means that based on a production of 68,000 of them per year, you're going to get that financial return projected of 52% bill offsets, which for you equates to monthly savings amounts of well over $900. So this means that your bill should only be $848, $850 a month or so right there, versus what it once was on average, $1787. So that's the 52% savings value right there that you see, and also what yields the lifetime savings over what is a standard 25-year life cycle for a solar project. So I know specifically the incentives were of interest. You wanted to talk about that. What is really getting you down to this payback of 3.8 years? The major one for you as a business is going to be the federal tax credit, 30% applicable to any project costs that are directly related to the solar installation. So that's labor, materials, engineering, anything in between that's going to cost money to get the solar operational at the end of the day. That value can be used at any incremental number up to the year 2034. You could use the whole tax credit, which is amounting to just nearly $30,000. You could use it all in 1 year, in the year after the install, say in tax season 2025, or if you need to spread it out, you can do that. You could use it $5,000 at a time. So it's just about making sure that you file for this tax credit the year after the solar installation. You can claim it then. So if we installed in June, then you'd be looking at, whether it's February, April, whenever you file your corporate taxes, that's when you can claim this 30% value. The rec revenue, which obviously is quite substantial in aggregate, it doesn't come in right away. It's going to be added up over that 25-year period.
Tell me more.
So that's going to be every 3 months, quarterly, based on energy generation from the system. It's paid out in 1,000 kilowatt hour
Who pays it?
energy unit increments. Now that's going to be signed up with Knollwood Energy. They are what's called an aggregator. They monitor the system and how much energy it's going to put out, and they can verify it so that you get ownership of these extra certificates based on those 1,000 kilowatt hour units. So you should make about 68 of these certificates every year, and that's going to equate to 27 times 68 per year. So 27 times 68, if you divided it by 4, is going to get us your quarterly rec revenues. 27 times 68, and that's your 68 recs times the going rate right now at $27 per rec. That's how much per year extra, $1,836. It covers about an extra electric bill if you think about it like that. And if you divide that by 4...
how I never heard of this before.
It's an incentivization for businesses and also houses in New Hampshire and in New England as a whole to create carbon offsets through the generation of solar energy. So it's an extra incentive for property owners to, essentially do the right thing, get those recs produced so that other bigger companies like Apple, Google, and Microsoft basically can purchase carbon credit offsets because they're producing so many greenhouse gases. So what we want to do is make sure you get signed up for every sort of financial rate of return that you can, and this is one of them, where every 3 months we're getting you $459 extra basically for signing up with a third-party aggregator who then sells these carbon credits on an open market for you. They figure out how to make approximately 7-8% on their own, and they don't charge you a fee.
All right, I'll need more information on that to see if it's real.
Absolutely. It's
All right.
Knollwood Energy LLC is the name of it.
Do you have a connection there?
Yes.
All right. I need an introduction email.
We have several of them. And we also would be applying for this commercial state incentive
that's
for
nothing,
you. Which, well, it depends, nothing.
It's nothing.
Depends.
Compared to the other two.
Yes, of course.
Let me ask you about, could residential qualify for Knollwood Energy?
Yes. Residential qualifies and commercial.
I heard many presentations. This is the first time I've seen it. That's why I'm questioning it.
Yeah, I understand.
I heard about 12 solar presentations at this point.
We've signed nearly 50 clients up with them.
Yeah.
And they do both residential and commercial. As I said, they sell your credits in the New Hampshire market and the Massachusetts market so that they're able to get the highest rate for each of these renewable energy certificates.
Okay.
Is what REC stands for.
I definitely need
Yeah, I'm happy to introduce you to them. And they're basically a company that, for the purpose of verifying how much energy you've made, they then can take a certain amount off the top, and then they sell the rest of the rec for the customer that signs up with them. So it's a 3-year fixed contract basis, and after 3 years, if you want to sign back up for whatever the going rate is then for another 3 years at a fixed price, you can do that.
Okay.
And that's a free service from Knollwood Energy. So that's going to be the one that we kind of coordinate the relationship